The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the October 31st. Fantastic Friday edition of today's opening bell on the Trader's Edge. Of course, most of you are wondering, is this a trick? Or is this a treat? Well, I can tell you it's a treat for me because I am back at world headquarters for TFNN. I'm your host, Steve Perseverance Rhodes, and I believe we should always be pioneers of our future and never, ever, ever be prisoners of our past. I'll be with you for the next couple hours. I do this show here, and I'm going to join Tom and Daryl today. It's great to be back at HQ out here doing the show. Now, of course, it is Halloween, and that means that each of you are out there preparing for those little goblins and, well, probably a lot of frozen costumes, I suppose, is what we're going to see out there. So make sure. Now, I don't know about you, but, my best Halloweens, I could always remember those homes that gave out the large candy bars. There were really only a couple. Maybe you've got some memories of that as well. Hey, at least for your neighbors, go out there, go buy some of those big candy bars. It is Halloween, of course, out there. But I suppose what most of you are wondering, is this trick or treat with regard to the markets out here? It is a sweet way to start off your day. If you're a bull, if you're a bear, it most certainly is not. Right now, we've got futures. They're skyrocketing. It's global. It's across the board out here. The Dow futures, they're trading up 179 points, trading out at 17,293 as we speak. S&P futures up 2275, trading out at 2,011. You've got the NASDAQ up 64 points. That's leading the charge, actually, as we speak. That's trading out at 41.53. A lot of movement in the currency market, mostly because Japan, they were out there printing. Now, of course, what they've done is they've expanded their version of QE. We pull back our QE. They expand theirs. Of course, we know that Mario Draghi, the marketing machine of got to come up with I guess Dewey, Hook 'em and How, because that's all he's about out there. He never ever follows through and does what all he is just a marketing. Hey, I'm not picking on the guy, but I am just saying that it's a little different case when you're over in Japan. They actually do what they say they are going to do. So we'll take a look at the currency markets. Hey, how about the hard currency markets? Your gold getting the kibosh, trading down $35 as we speak right now, trading out 11.63. Silver up 55 cents. It's trading at 15.87. I did say major market bottom, did I not? I did say Santa Claus rally, did I not? Well, folks, if you are long this market, and so you know the size horns that Stevie Son wears here, has been wearing, I'm going to say today would be a good day to retract some of those horns just a bit. Start to get maybe a little bit neutral out there. There's nothing worse than, the reason that you don't like to drink too much too fast is because the next day you can wake up with a pretty nasty hangover. And I'm afraid that may be what the market is going to do here. No, it's not going to crash. Is this a market high? No, absolutely not changing my outlook there. This market is going to continue motoring on higher at least through the end of this year, probably beyond that as well, but at least through the end of the year. But we're going to start to see this market start to give back, start to do some kind of retracement out here. Look, a small retracement could look like something that would be very large out there. So I just say that it's just like going to a party. It's just drinking too fast out there. And I'll do a lot of work over the weekend on that, but it's pretty historic what it is that we've done over the last 11 trading sessions out here. Certainly I think it's the biggest move, certainly since the March lows out there, just to put it in perspective. I don't know that to be factual, but I will check out the facts out here. In any event, let's get straight to the markets out here. Let's go see what's really going on. So, look, I just want to make sure. Now, what I really mean by that is you should be starting to get to maybe more towards a neutral standpoint. standpoint, because things are getting to the extreme overbought condition out here, and it's just natural that things will pull back. Maybe it's Monday, maybe it's Tuesday. I'm not going to pinpoint it to the day out here. And what this suggests to me is actually a little bit of a rocky road here for the next week or so, maybe a couple of weeks till the middle of November even, with this type of movement that we've had out here. So let's go check in on this movement. And where do we want to begin? Now, let's go take a look at let's first take a look at the futures market. So let's take a look at the Dow futures as an example. 100% move. So if we just simply didn't get too caught up into where the futures are at here this morning, what we would know this is when you make a 100% move, it's a swing point. It's going to be taken. I would imagine it's going to be taken out with volume out there, setting up. But we'll just have to wait till the end of the day and we'll find out. But the swing point that we're dealing with here is September 19th. So the goal has been reached. Whenever you reach your goals out there, make sure, tighten your stops up. I don't think the market's going to, sell off or anything like that. Hey, anything is possible. I don't control the next move in the market. But what I can tell you is that your logical spot for a price to start to stall is when you make a 100% move. That's exactly what we're doing right now. We're trading into that September 19th swing point out there. I'm just simply issuing a word of caution. I'm trying to put up a little bit of a yield sign for you. And I'm also I'm saying, do not short this market. Now, 10 o'clock, I may have somebody that's going to differ with that opinion. That's what makes these markets. That's what makes us buyers and sellers, bulls and bears out there. But what I am saying is maybe it's time to start to get more towards that neutral stage out there. Now, probably nobody even expected to hear that coming from this bullish mouth out here. You've made 100% move. Pay attention to the technicals that are out there. That's what's going on inside of the Dow. You're trading out at 17,301. Let's take a look at the S&P futures. What are they doing? If we take a look at the ES Mini, they're trading out at 2012. If we take a look at that, 2012, what is it doing? It's gotten back to it's gotten above the the September 19th high at, 2014.50. Yeah, so you're trading at 2012 right now. So we did get to a high intercession here. It looks like about 2016. I can see that these monitors are a little bit further away than when I'm doing this from remote locations out here. 2016.75. So you've made a 100% move there. One heck of a V-shaped bottom. Boy, is this a blow-off top? No, this is not. This is when I was calling the major market bottom, the Gartley buy. Now, Gartley buy's got at least 5 different outcomes. We're into outcome number 4 by making that 100% move. Outcome number 5 is going to come to fruition. That's going to be the A to B equals CD to the upside. And it's a doozy out here. Doozy is a technical term. If we take a look at what that doozy is, if we take a look at that A to B equals CD, you're going to come off of the February lows out here. Well, that's the April lows. Let me come back to the February lows. It'll make it a little bit easier if I actually give you the right swing point out here. There we go. Now we're going to come out to the April lows. We'll pull this back just a tad for you. And we're going to do the price projection on the futures. We can do the same thing on the S&P index. So your A point's going to be down there at that February 3rd-ish, February 5th-ish area. You're going to be up here as your swing point. Your B point is at the September 19th high. Many thought that we'd never get back up there. Well, guess what? They were wrong. We are back up there and then some. Now, when you take a look at this explosive move off the C point, it really doesn't get much stronger than that. It's hard to envision how it gets much stronger than that. So what is the outcome here? Where is the ES Mini headed to? Well, folks, the first stop, now it could actually get there. So it doesn't have to cool off here today. It doesn't have to cool off on Monday. I'm just trying to prep you for what's going on inside the markets, what I at least believe is going on inside the market. So if I was good enough to be able to call that major market bottom in October 15th, maybe worth listening to. 2,117 is going to be the first target, but the ES Mini is not going to stop there. We're going to see thanks a lot for rebooting that. It's going to be the 2,200 level. So, of course, my screen has gone blank, so now must be on autopilot, but the ES Mini, it's on its way to its own version of the moon out there. That's interesting. Let's take a look at the NASDAQ out here, up 67 points as we speak last night. Always makes it a little bit easier to do the show when I have charts. Now, I've only got one of my systems going because I don't have all of the normal monitors that I have out here. So, that being said, I don't know why it is that I'm not getting the data through here as we speak right now. Let me switch over to maybe a different screen. No, that's a bummer out there. So I'm not sure what that what that's all about. So now I've got to make things up. Now, it's not very good to make things up. What I can do is take a look at price, and I'll just simply hope that at some point in time here it'll kick in. And at the same time, I'm going to go ahead and try to start this other system out here, although that could be a little bit confusing on the roadway, on the Steve Rhodes roadway. But let me, it could be dangerous to do that too. Okay, look, if we take a look at currency pairs out here, the Euro-Japanese yen. Now, you know, the Euro-Japanese yen is one that tracks the stock market better than anything else out there. Okay, great. So we got the dollar index up here. So the Euro-Japanese yen, I'm afraid to switch buttons here. All right, I'm going to switch over. Sorry to be maybe switching stories here, but I got to go with what I got to go with. So we're going to take a look at the U.S. dollar index. Now, obviously, what you know, the U.S. dollar index, basket of currencies, you've got the euro, which is like 57%. You've got the Japanese yen, number 2, about 13%, I believe. You got the Great British Pound, 10%. The Canadian dollar, I don't know, 7, 8, 9%. Those four currency pairs represent 92% of the entire basket out there. Now, the U.S. dollar index, this is what's really amazing here, is you got the U.S. dollar index trading out about 87. I've got a 10-minute delay on this screen out here. So it is taking out its swing point high. I did not expect that, that's for sure. That is the October 3rd, October 4th high, October 6th high. I did not expect it to take that out. Nonetheless, it'll be the unfortunate thing is the data we get from the CFTC is as of Tuesday's close out here. So that comes out on this afternoon. But even still with this move, you know, I'm gonna imagine that through this past Tuesday, that what has taken place is that they being the large commercials have continued to up the ante in getting short the U.S. dollar. I know it's kind of hard to believe, but it is what it is. And let me tell you, folks, these guys don't really get it wrong very often. In fact, I mean, they're the ones that maybe don't use stops. You need to use stops. We all need to use stops out here. So, unless I see some other data out here, it's really setting up for the U.S. dollar index to pull back and for gold to find a bottom. Now, where is that bottom that we're going to find in gold? I wish I could tell you what the exact price is. I could give you a guideline as to what it is that we should be looking for. And that guideline here, you can see gold trading down at 1162 right now. There's volume behind the move out here, so nothing like a exhaustion low that may be in the form of gold. Now, I do not believe that's the same thing that we're seeing inside of the market when we take a look at the indices. So, you know, the two are two totally different vehicles out here. If we take a look at gold, we take a look at the A to B equals CD pattern, we're beyond the 1-to-1, that's for sure. Now, here what I'm doing is, or what I'm trying to do, I'm trying to come back. We got some music. Means we're going into the breakout here. So when we get back, we'll take a look at Goldilocks. We'll go take a look at a weekly chart for gold. Try to get an idea of a couple different target areas where it ought to find support. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So Goldilocks trading out at 1162 and change out here. If we take a look at the most recent weekly swing point high, that's going to take you back to the high on March 17, 2014. 1392.60 is the number. Your B point is going to be the low on June 2nd, down at the 1194 range. Makes about a 70% retracement. That was up into the weekend of July 7th, 1 to 1.272. That's the next stop. We're basically about there. 1152.95 is the number so far. Intra-session low has been 1160. Now, what we want to watch for, the question is going to be, will gold, spike that level and then pop back up above and this is what we're really watching, the June 24th. One of the things I'm watching, the June 24th, 2013 swing point. Can it get back above 1179 out there? Boy, if it can, then you've got gold in a consolidation type pattern out there. If it stays below that 1179.40, that's that swing point out there. We'll have to assess some other A to B equals CD patterns. We'll just simply have to do that, but let's wait to see how the day plays out. Let's go out to Massachusetts to Mike. Mike, thanks for calling. Thanks for holding. How you doing this morning? Mike, do we have you?
Yes.
Oh, great. Okay, you're kind of quiet in my ear. Maybe, Al, you can pump that up a little bit. Mike, so tell me, what's your favorite candy bar?
I'm going to go with Butterfinger right now.
Butterfinger. I like Butterfinger. That is as a kid growing up, did you like Halloween?
Absolutely, yeah. Still love it.
Go good. Okay. So for me, my best memories were there was one house, and this guy, he had to love Halloween because he always gave out these big old candy bars out there. Most people give out small stuff. So,
right.
Did you ever have something like that?
Yeah, it's mostly the small stuff now, but
Yeah.
you give out like 2 or 3 of them, it's the same thing, I guess.
Yeah, absolutely, absolutely. Well, I love Butterfingers too. It's that's a good candy bar. You want to take a look at IWM? Tell me what you're doing, how I can help you.
Well, I'm in TNA right now. I'm in just under 70, so I want to try to. If there's going to be a retracement, I want to maybe dump it and pick up TZA. So that.
Here's my recommendation. Number one, the move is not over. So there's in my mind, there's this move is not over. The move is really just beginning. We've got a long way for this move. Now, where it's going to end, I don't know. When is it going to go through? At least through, it's the Santa Claus rally, so I figure it's going to go at least up through December 31st. It's not going to go straight up like we have seen off of the October 15th low, although, it could keep on going. I can't stop it from moving higher. My recommendation is not so. Now, are you an intraday-ish type trader, or?
No, I mean, like 2 or 3 weeks, I think.
Yeah, I don't. If the market does anything, I don't think the pullback is something that's major. I think that what you're looking to do. So my suggestion. I was talking earlier, we start taking a look at things making 100% move. There are normal areas where price starts to stall, maybe pull back, maybe move sideways, something along those lines. And that's really what it is I expect. My opening really should have been more, so don't jump on board this train here just now. You don't really need to do that. And that probably should have been more of the message. If you're long, look, make sure that you're moving stops up. But I can't, if you want to play TZA, God bless, I don't think that there's going to be a major pullback.
Okay. I guess I should qualify myself and just say I missed your opening statements. I apologize for that. No. Look, hey, not a problem at all. What I basically was saying there is I took a look at the market and said, okay, let's not get too exuberant here. It's like, I don't know about you. I love going to parties. But if you drink too much too fast, you can then you don't even know how much you've really, and you keep drinking all night long. The next morning you have a pretty bad hangover. At least I have. I don't know about you. Versus, usually, yeah.
Versus if you're just, having a nice meal and you're casually drinking and so forth, you typically wake up the next day, you're okay. This market has now had too much to drink too fast. That does not mean that this is going to be a market that this is like a blow off top or something. I'm not in that camp, not at all. But it has done a bit too much too fast, and so it means that we're about to see some type of small retracement, moving sideways, something along those lines. But if you're in a good trade here, if you're looking for the longer term trade, just always use stops, whatever you're comfortable with, as far as is giving back. And I don't think this market's going to pop and then drop. Of course, Mike and I wish I had that crystal ball to tell you for sure, but I can't recommend going short this market.
Okay.
All righty.
All right. Just one more thing. I just want to thank you. I'm up about 20 points on TNA over the last few weeks, and it's because of you. So thank you.
Well, thank you, Mike. Thanks so much for calling in. Have a great Halloween. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 153, trading out at 17,348, S&P up 19. She's trading out at 2013. Composite up 65 points at 4632. Russell 2000 up 14 points, trading out at 1170. Goldilocks back 35 bucks. Silver off 54 cents. Light sweet crude off $1.41, trading out at 79.71. The king of beers, the king of dollars. That's up almost 900 ticks, 850 ticks out here, 85 cents, trading out at 87.06. Leading the charge, the upside, LinkedIn having a nice morning out here, up 24 bucks, up about 12% as we speak. Looks like I've got a little bit of a data flow issue here. Holy shnikes. Mercado Libre, MELI, son of a gun. I was looking at that as a long entry out there, and that sucker is up, what's that? Mercado Libre is up 20 bucks this morning, up 18% out here. GoPro is going to the moon. It's up 10 bucks, up 15%. Mohawk Industries up 6%, up 8 bucks and change. Netflix up 8.40. You got Biogen, BIIB up 8 bucks. You've got Baidu up $4 as well. To the downside, Agerian Pharmaceuticals down 12 bucks, off 35%. Holy cow, what did they do? They are certainly not enjoying this morning's move. You got some volume behind that move. Regional Management Corp, that's down 32% as well. Royal Gold taking it in the shorts here this morning, 5%. Of course, all the miners probably just, see, is there a positive miner out there? Probably not. Actually, Vista Gold, VGZ is flat as we speak right now, but that is only trading at 29 cents out there, so let's not let's not blow our skirts up too much. You've got Trimble Navigation down 10%. Agnico Eagle off AEM is down about 8% out there. Anadarko Petroleum off a couple of percent. Let's try to take a look at some of these stocks here that are moving. This is pretty tough symbol-wise, so okay. Time to see if I can fire up a game plan B out here. Son of a gun. Let me see this. Sorry about that, folks, with the little delay in the charts out there. It's a real bummer, but it's been a while since I've been in the captain's seat here, and so I've got things running off of a little bit of a laptop, and looks like it's just too much going on, too much activity, too much buying and selling by all the views out there. Let me see if I can. I'm trying here for Plan B here. Should have just done Plan B during the break, but so be it. Give me a moment here. It's just so much easier if we take a look at a stock chart. Otherwise, how do I evaluate what's going on inside of the market out here? I got to turn on the data feed. Son of a gun. Let me do this. Let me do this. Sorry, I'm on a different screen out here. That's a terrible thing, being live TV like this. And no, it is. Oh. Okay, so what we got to go with a game plan B here. We've already talked about some candy bars out there. Now, trick or treat. Oh, well, let's see. We got I can do is sit here and be patient. So moving to you got the Dow's up 145 right now. You've got the XLK. Let's take a look at some of the sectors out here. You've got the technology sector, the XLK. That's up 50 cents. The XLF, that's up about 23 cents. Now, I may have a little bit of a delay out here. Energy sector, how about this? So you got the energy sector trading off 36 cents out here as we speak this morning. So I think ExxonMobil was out with numbers before the bell. So an ExxonMobil being the largest weighting inside of the energy sector. I don't see them as a leader dollar-wise or anything on my charts out here, but we've got some things that are down fairly large. So, yeah, I believe that it was ExxonMobil was out with numbers, maybe even Chevron out here. So I am imagining that those equities are trading lower, going ahead and pulling down that energy sector out there. They're not having, of course, ExxonMobil is fairly large weighting inside the S&P, but it's not really doing too much there as well. You've got the financial sector. That's up 23 cents or so as we speak. Looks like some pretty decent volume inside of that. Priceline on the move. So there's one of the long positions that we have in the newsletter. Up a nice $30 here this morning, leading the charge. That's up about 2.5%. LinkedIn is up 11%. This is really, really wild out here that I can't get this thing to populate a stock chart for me. I wanted to take a look at Mercado Libre specifically. Really, really weird. That's a tough way to do the next 20 minutes of radio out here. Trying to figure every other way that I can get a stock chart going here for us. Boy, it would sure be nice. Okay, let's see. I've got something going that we can take a look at this. So let me, here's the Dow Jones. Looks like this is the Dow Jones Transportation Index. Yeah, so this thing has struggled a bit yesterday. Headed back up towards its high. So, you get this 100% move up here as well. This should be in a stalling pattern. Let me go back to Mercado Libre, see if I can pull that up on the screen. We're taking a look at the Rhodes momentum trading signals out here. Okay, good. So we've got this thing, although I don't think this is today's data. Yeah, it is October 31st. So if we take a look at Mercado Libre, it's just looking at some stock charts out here that were moving higher. I don't have the volume on this chart, but when I was taking a look at it, nice wide-ranging bar out here. Nice wide-ranging bar on October 29th. A little bit of a pullback here yesterday. Mercado Libre is going to head out and try to take out its swing point from September the 5th out here. The price on that, oh, man, this is a different mouse. So how do I grab that? Son of a gun. How about that? That's too strange out here. I've actually used a different mouse too today, folks. So there's a way for me to grab that data. Well, there's another way for me to grab it. Let me find out. Got to always have game plan Bs here, right? Especially while you're live. Let's see, where do I get my data box? Data box. Show data box. There we go. Question is. Now we're seeing Mercado Libre gapping up. Yeah, see the delay in the system out here. So it's taking out that September 5th high. Man, the delay's out here. What an absolute bummer out here. So let me see what happens if I switch this over to a weekly time frame. Let me just do this. It's just going to be easier because I hate kind of mumble jumble, and that doesn't do us a whole lot of good. In the case of Mercado Libre, it is headed back to its swing points. Looks like back here from October of 2013, somewhere in the 144-ish range here, 134 as we speak right now. So on a weekly basis, big huge A to B equals CD to the upside. So it looks like this thing is, this used to be in favor inside of the IBD 50. If it's not back on the list, it's trying to do everything that it can to get back inside of that list out here. Let's take a look at, since I don't really have the stock charts working too well, let me try to give you again an overview as far as a game plan as to what it is that I see in the marketplace. That might be the easiest way to do this. And then if this stuff shows up live on my screen, that'd be great. So let me first talk about the major low that was put in here in October. And let me give you some, I'd pull up a newsletter, but I don't have it on this system as well. Let me give you some of the analysis that went behind that. Then you can do some of this work yourself. So number one, what I have done is, I like to analyze data. You hear me talk about the fact that you should be a pioneer of your future, not a prisoner of your past, right? So if you think of all the things that stop you from moving forward in life, it's always because of something that that's happened in your past out there. And the reality is, if you want to be an explorer, if you want to set your sights and be able to bring in new things into your life, you've got to be an explorer. You've got to push beyond the things that hold you back in life. Now, it's different in the market. Most people are not like that. And so when we take a look at the market out here, when you take a look at the market overall, it kind of repeats itself. Would you agree that it repeats itself? If you agree that it repeats itself, then what that means is you really ought to go back and take a look at past history, past nature. There's all these great little colloquialisms, these little rhymes that we've got, sell in May, go away, all those types of things. But the reality is you've got to really put that in context. What does it really mean out there? So there are a number of different charts, data that I take a look at. Sometimes I provide information to you guys on the air, sometimes to just simply to clients out there. Sometimes I just kind of keep it in the background and I watch the market to see what kind of pattern is going on. So when the markets were moving down, in through October, and I was out here saying, hey, look, the market's going to put in a major bottom, the call was a whole lot easier than maybe it seems. Why was the call easier than maybe it seemed like when everything was going down? The reason is this. If you go back, you can do it. You can go back as far as you want. Now, I just simply went back 40 years. I figured 40 years was a pretty good sample size for me. That means it was more than 40 years. It was 44 years. So I went back to 1970, and instead of using the Dow, I went ahead and used the S&P 500. So instead of using my Dow, and I could go back to 1928 with the data inside the Dow, but that's not really, the Dow is not the best tool, I think, to analyze overall stock prices and their typical price pattern behavior out here. So I believe that the S&P 500 was the better of the data collection tools for me to use. So what I did was I went back 40 years, and I took every single day. I took a look at every single day of every year, and I went ahead and I averaged that out by day. So January 1st, in essence, matched up with January 1st, and took a lot of work to do that. Of course, I'm not a programmer, so I'm doing a number of the things with a spreadsheet out there. And then I had the average for 40 years. Now, what I did was I threw out 1987. Why did I throw out 1987? Because between 1970 and now, it was the only real crash that we've had. We've had the flash crash in May, but it wasn't, I just simply threw out 1987 just simply to get rid of some anomaly type data out there. Now, here's the interesting thing, and I have shared this with you before. I never told you the reason why. If you take a look at when the Dow usually peaks in the Dow, or the S&P is really what I should say, right? When the S&P peaks in the sell in May, How many of you believe that it actually peaks on May 1st? There are a lot of folks I know that would go ahead and they'd raise their hand and say, yeah, it peaks on May 1st. What I would tell you is you're wrong. I would say you're absolutely wrong, because if you took a look at 40 years worth of data, you'd find out that the S&P tops in July. Now, what's so interesting about that is if you go back and you take a look at one of the tops that formed inside of the S&P 500, you're going to see it was what? July 3rd. Is that a coincidence that it topped on July 3rd? Or is that just simply normal pattern behavior that's out there that becomes reliable data or data points out there? I think it is the latter. It becomes reliable data points out there. Then let me ask you this question. During that sell-in May cycle, when is it that you believe the bottom comes in? The bottom comes in, on average, right around October 3rd. Is it 3rd? No, it wasn't the 3rd. The 13th? 15th? Right. I don't remember the exact day, and I can't look at it. It was our bottom mark of the 15th. It was like the 12th. Right around October the 12th. So in October, in the month of October, that's when the market on average forms its bottom for its Santa Claus rallies. Now, the real gift, now did I know that the market was actually going to form a significant bottom? Absolutely not. How can I know that? What I can do is go back and use reliable data, take a look at what's going on, and then what we use, what you know that we use. So then the other tools to be able to try to tie all that together was what? It was a summation index for the New York Stock Exchange, the wider swath of the market. So here I am saying, okay, I'm using the S&P data. So I use the S&P data to help me understand what happens seasonally. Then what I do is I go back and take a look at, well, what's the wider swath of the market as the market was pushing down out there? As the market was pushing down, what was the New York Stock Exchange doing? The New York Stock Exchange, as you know, when we take a look at its price oscillator, which is a great tool to help you understand the strength or weakness of a market as things get pushing down, whether the move is real or you're going to see some kind of snapback. Not a snapback like I expected to see here, but what we saw was rising bottoms there. And then what you do is you go back and you take a look at those rising bottoms, and you go back as far as you can. You and I have done that on the air a number of times out there. We went back 15 years. We never found a time period, never, not a single solitary time did we find a time period when the price oscillator dipped below zero. That's the green horizontal line on the bottom of my screen, and then started to form rising bottoms and not bounce. Now, on two occasions, what we saw was the bounce was relatively mute. It did move, it did bounce, it did create a bottom out there, but that was only two times. The majority of the time, you saw a fairly significant bottom. So the timing of the market pushing down into October 15th, seeing those rising bottoms, using that empirical data, not anything subjective, wasn't my opinion. It was just simply going back and taking a look at the stock charts out there. Now, where is it that we're at today? Why is it that I suggested to Mike that, hey, this is not a blow-off top. This is not the market that you want to short out here. If you're day trading or something like that, that's a whole different scenario out there. And what is that reason? And that reason is because we now have a rising price oscillator when we're above this zero line out here. You take a look at this little green line going across my chart out here. Even today, you know, what the New York Stock Exchange is doing, it's making it even higher. Now, the day's not over, so the price oscillator can change here at the end of the day. But right now, the high that took place on October 28th, that's being taken out again this morning. This is not how markets end. It's not how markets end. Hey, if we go rely on that data back that I took a look at for the last 40 years, that's what says the Santa Claus rally began. We're going up in through December 31st. This is Steve Rhodes. This is TFNN. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow's up about 135 points right now, trading out at 17,329. S&P up 15, trading at 2010. Composites up about 59 points. She's trading at 46.24. Gold still back $32. Silver 45 cents right now. What I did was I opened up this morning's newsletter. I'll go ahead and put that chart up on the screen here for you. If we take a look at it, you'll see my comments in the newsletter as well. And now this was written last night. I knew that I was going to be on the road early this morning, and so you're seeing my comments as of last evening, and what I posted here that's inside the Tiger's Den. There's the chart. There's basically the database of data. Just simply taken from an Excel spreadsheet out here, and it shows you the average. Now, don't worry about the very last bit out here. That's not accurate, that piece of data. But what this does is this really gives you the feel. This shows you the actual when the market basically makes it peaks and troughs on average out there. And the one thing is the market, always repeats itself. So it's something to really pay attention to. You can see right back here where my cursor is at, that was the low that in essence came in on October 15th. Now, in our case here in the market, when it came in, what was so nice about the market coming in on October 15th was that it made a Gartley buy pattern. It's the Gartley buy pattern that came off of the February 5th swing point out there, pretty significant swing point. So what do we see here? We see the market moving up. The market was supposed to have pulled back a bit. It didn't do that. So it has not done this little slight retracement that should have taken us into maybe October 23rd, 24th, something like that. It really didn't do it. We had one day where the market sort of pulled back. And then what it has done is it's moved higher, just like a little rocket ship, right? Take a look at this. This is average. This is the average over 44 years worth of data. You don't think that the market moves pretty high between when it makes its bottom in October and into that November time period here, November 2nd, November 3rd? That's really what this date is that is out here. And then it starts to pull back. And so you can see the date out here says, hey, we should have some rough sledding ahead. I don't know how to interpret this, especially because this move, does this mean we're going to see a move sideways? Is this a move where we're going to see a bit of a retracement and then a move sideways before it starts to take off? But what this tells me is right around the middle of November, the November 14th, November 15th, something like that, maybe even into Thanksgiving is what we see the market actually do, is maybe consolidate some of these gains that we have seen out here. I'm pretty certain that when I go back and I analyze the data, I take a look at the last 11 days, the size of the move out here, it's going to be one of those historic type moves inside of the marketplace. So that is why when we came on the air, the futures were up, and I said to you, okay, so all of you bulls out there, all of us need to retract our horns just a bit. Don't get bearish, but do expect the market. Now, again, I said I don't know if it's today. I don't know if it's Monday, if it's Tuesday. It's near. It's like being able to have a earthquake report ahead of time. So the market has already done what it's supposed to do. And if you are a believer in that, and you're a believer in the way that I was able to put this data together and then call a significant bottom, then why would you not believe the data that we're taking? Why would you then ignore the data? And that's really all that I'm saying. Let's not ignore the data. Let's not ignore the last 44 years. We could go back further, but let's not ignore the last 44 years worth of data. The market's going to do whatever it wants. It doesn't really give a darn what my interpretation of the data is here. But so far it's done exactly what we thought that it would do. Right? We thought that it would do this. So therefore, we're coming into an election. There could be a whole bunch of partying going on inside the market, and people are going to say, okay, what does this really mean? And that's where you can see the move sideways here for a bit. So my apology to all of my subscribers out there for having no other choice but to share this story, because this was plan B. In my system, I can't get any charts up, so what to do. Hey, stay tuned. Tom O'Brien, Daryl Martin, they're going to be up next, and I'm going to join them. So have a great Friday, folks. A great weekend. Have a happy Halloween. I look forward to seeing you Monday morning or in about 8 to 10 minutes. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.